Hello and welcome to this Tuesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up, Mike Baudendistel is going to give us a rail intermodal update. But first, we're going to go to Zach Strickland with a carrier update brought to you by Powerfleet. Stay tuned.
Hey everyone, and welcome to your Tuesday carrier update presented by Powerfleet. I'm Zach Strickland, and today we are watching these volumes go up for dry van right now. So we were talking about the volumes yesterday, kind of stalling out at the beginning of the week. Monday, Tuesday, we kind of seen this pattern of an established lull after strong Wednesday, Thursday volumes. Well, the volumes now are going up. We broke 9,400 for the first time in over a month. So we're back up over 9,400 on the Outbound Tender Volume Index, a pretty strong sign. I've got them broken down into the dry van and reefer volumes, however. Now, an interesting thing here is that reefer had been kind of driving a lot of that increase in the volumes until just recently. It looks like our reefer volumes down there in the green line, the ROTVI, as we call it here, have actually stalled out and decreased slightly. The good news for the freight market, if you aren't a reefer carrier, for instance, though, is that you're now in this holding pattern. Things have not really taken off for you, but at the same time, the dry van is 70% of the freight market, which is what I'm trying to say, and that is going up, so that's going to drive volume. So the carriers out there will have something to keep their utilization up a little bit stronger. So looking at the overall market in the national scene here, anything in the green, these are going to be the markets that show some sort of significant statistical analysis or statistical increase in volumes week over week. The Nashville market sitting out there in the dark green. You got Jackson, Mississippi over here. A lot of these smaller markets, but you need to pay attention to this Allentown market over here, right here next to the megalopolis. It's one of the biggest markets in the United States. Looking at the U.S. market share right here, 2.846% of the total U.S. market share. That's good enough for the top 5 markets in the United States right now in terms of volumes. A lot of those volumes, however, are short haul volumes, so it's not necessarily something that you're going to be able to go into that market and start driving across the country. You're going to have a lot of short haul freight. So let's break down the Allentown market on our little chart here. So we've got van and reefer and O-Tri broken down on the Allentown market right here. So we've got the van volumes. You can see that big devil's tower right there for dry van volumes jumping up here over the last few days or so in the Allentown market. Reefer volumes also increasing out of the Allentown market over the last couple of weeks. They've taken a little bit of a dip, just like the National Outbound Reefer Volume Index, but still relatively high compared to the floor that we saw just a few weeks ago. So tender rejection rates, 4.3%. That's well over the national average of 2.96%, which we're seeing right now. So tender rejection rates are a little bit higher out of this market. It's good to know if you're going into this market, you may need to scour the spot market. You might have a little bit better extra chance of finding some freight to move to keep your trucks utilized today. Strong increase on the volumes, statistically speaking, week over week. Moderate increase on the head haul volatility. If you look at the head haul number up there, that's a 61. That means they are very at risk for undersupplied market in terms of freight. So any kind of positive number on that head haul index indicates you have a high risk of undersupply, therefore increasing upward pressure to rates as trucks are exiting that market faster than they're entering the market. Looking at the breakdown of the length of hauls, like I said before, city outbound tender volume, that's your local volumes, leading the pack there with one of the highest percentages of volumes coming out of this market. So again, a lot of short haul freight. That's only going 0 to 99 miles. So again, you're going to go up there, but you're not necessarily going to come back out. That hasn't changed. But again, utilization is the name of the game in a depressed market. So if you get up there, you may need to check out the market. Let's break down another market. So Nashville, Tennessee, Music City, my hometown, has also been showing, if you remember on that map, a pretty big jump in volumes as well. Not as significant as the Allentown market, however. We've got the ROTVI and the VOTVI, just like the other chart. O-Tri, 4.04% out of Nashville, again, well over the national average. Volumes are trending higher for both reefer and dry van volumes. So again, it's going to be a little bit better market in terms of finding that length of haul, longer haul freight, which is going to keep your utilization a little bit higher. The tweener market is leading the way. So anything from about 450 to 800 miles is leading the way. So again, Nashville might be a pretty good market along with Allentown, and that'll do it for today's carrier update.
The comprehensive logistics offerings from Powerfleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with Powerfleet.
Welcome to your Rail Intermodal Update. I'm here with Mike Baudendistel. Mike, what's the latest?
The latest is the biggest news story for the railroads the last several days was Union Pacific is shutting down its Colt Connect service. So this is basically a refrigerated service that's done in partnership with its logistics provider, Loop Logistics. And so they were providing warehousing for refrigerated products in California and Washington State. So things like food products, wine, and also warehousing on the East Coast in New York State. They're shutting this down, and really the idea originally as part of an acquisition a few years ago was to take trucks off the road, put them on the railroad for products that need to be refrigerated that were going very long, call it 3,000-mile lengths of haul. And I think the closing of that really underscores the difficulty of using a refrigerated service in intermodal because of the service-sensitive nature and the potential for spoilage. So that's part of the debate of is intermodal a growth area? Is can you migrate to refrigerated? That's sort of a big indicator. Maybe the answer is no or not yet. This chart shows the long haul outbound tender volume index in blue. So that's the volume on truck for longer than 700 miles. So that starts to be where it gets to be competitive with intermodal. And we saw that in orange is the intermodal by the AAR, and intermodal really did not participate in this surge of volume that we saw related to COVID. Now it's starting to trend more in line. And what it did happen on my next chart gets into a little bit more of some of the other impacts on intermodal. You're seeing in blue customs maritime import shipments in Los Angeles, and it does take a while for those to translate into truckload. But we saw sort of this V from the COVID, but it has come back to sort of pre-COVID levels. A lot of this, the reason why it looks more normal is there's been a push back in terms of some of the volume that should have moved here is now moving now. But based on sailing schedules, some of the blanks sailings is 20-30% of what's expected to would normally take place. So we are expecting this to fall off. And then the other interesting thing is putting this against the outbound tender volume index in green. This really has not participated yet in this improvement in the volumes coming in off the port of Los Angeles. This is still sort of depressed. It does take a week or two sometimes for those maritime import shipments to translate into truckload, but also a lot of this volume here where was truck activity pulling products out of warehouses in Southern California, and now where I think what we're doing is replenishing a lot of those inventory levels. On the next chart, talking about how this is translated a little bit into intermodal rates. In green, you see truck rates between LA and Los Angeles. In blue, you see intermodal spot rates between truck and Los Angeles. And we see that the truck market, after some strength in December, has sort of steadily gone down. We started to see a little bit of a bounce. Talking about with the outbound tender volume index improving a little bit, like we've talked about the last couple of weeks. With intermodal, intermodal rates are less volatile. We've sort of seen this sort of slow, steady sort of decline. But when you look at those and say, okay, within 7 cents of each other between LA and Dallas, that's not really enough of a spread to say, well, intermodal's worthwhile if you're only saving 7 cents. You really want to save, let's call it 15% or something.
Gotcha. Mike, a lot of great information here, and just kind of quick review. You start off with the refrigerated intermodal. That's not really a common thing, right? When we're looking at intermodal and rail and things like that. Yeah,
that's right. Like Zach was talking about a minute ago, that 70% of truckload is dry van. For intermodal, it would be way higher than that. It would be almost all of it. So there's starting to be some investments in things like refrigerated containers. You've seen Canadian National do that. There's a company that's called Tiger Cool Express, which their whole business model is starting to do that. It was a startup company, so they're investing in that. This UP cold chain was one unique way to try to address it, but it hasn't something that it hasn't been something the market's really sort of totally figured out yet.
And you also mentioned that there wasn't quite that same ramp up that we saw in other areas with COVID. Do you think that some of that is due to a lot of consumers now kind of looking towards getting those non-perishable, consumable items that aren't necessarily going to be refrigerated, that might also hinder that part of intermodal and maybe some refrigerated rates as well?
Yeah, I think the perishable stuff is hard to move intermodally, and also the fact that everyone was in such a hurry to get all those products, and the retailers were in such a hurry to restock those shelves, that those levels of service, you really couldn't use the intermodal option, which is really you're saving money in exchange for a lower level of service. They needed those higher levels of service, and plus where a lot of those products were going were distributed locally to stores and things, and not necessarily close to a rail yard, rail hub. So I think it just really did not fit well into the intermodal network.
Sure. Mike, thank you so much. Always insightful. Appreciate your time, and thank you so much for tuning in. That's going to do it for this episode of FreightWaves Now, but the content doesn't stop here. We're always streaming around the clock, so check out our FreightWaves Now TV app, or FreightWaves TV app, I should say, on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.